we've got Mose Adigun from JP Morgan, and Mose is going to speak to us about what we expect from a CFO from an investment banking perspective. So it should be really interesting.
Fantastic. Let's get going.
So hello, I'm here with Mose Adigun from JP Morgan today. Mose, thank you for coming.
Thank you. I'm very happy to be here.
Oh, delighted to have you. Before we get going, so JP Morgan, obviously huge investment bank, got lots of CFOs that would love to learn more about what they could be doing to attract investors and things they should be looking at and thinking about. But tell me a bit more about you and your career. So you're at JP Morgan. How did it start?
Wow. Okay. Right. So I've been at JP Morgan 17 years. Maybe I start with what I do now and then give you a little bit about the journey as to how I got here. Today, I lead our EMEA Tech M&A team, which means I work with our clients across different areas of technology who are looking to conduct M&A transactions, anything from minority stake sales all the way to full exits. I also, in the past, worked with companies looking to raise financing, and that's what I do today. I started at JP Morgan 17 years ago. That number, even to me, feels very strange sometimes. You know, I'm not sure I'm old enough.
You definitely don't look old enough, but
yeah. Right. So I started on the graduate program in 2008, which was a very interesting time to start investment banking, right in the middle of the financial crisis. I started in a team called the IPO execution team, but this was 2008, and there were no IPOs being executed anywhere globally. So we spent a lot of time raising capital for companies in the natural resources, for banks that needed recapitalization. And then the IPOs came back, and then I started doing those as well. And then my team merged with the M&A team, so I started doing M&A. And then about 10 years or so later, I moved into a coverage role. So prior in my IPO and M&A job, I had been not a sector specialist. I had done those products for companies in a range of sectors, but I wanted to get to know one sector a bit better and a bit deeper. And so I moved into tech coverage, TMT coverage, and spent a few years there. And then recently this year, moved back into M&A, but still within that tech industry that I've come to know so well.
Oh, congratulations. You're very highly regarded at JP Morgan. So congratulations on a successful career. And we're really looking forward to learning more about sort of that sector. So if you could help me, so obviously I am a current CFO, but we've got lots listening. What do you think from a banking perspective that the CFO or the FD should be bringing in terms of when they're preparing for a fundraise? And what's the common pitfalls that people aren't thinking about when they're trying to get sort of this capital injection?
So the way I'd answer that question, answering it purely from a CFO perspective, and I do have to say I've never been a CFO, but I have worked with very many. Exactly.
You've probably seen some good ones, some bad ones, some excellent ones.
No comment. But yeah, I have worked with a great deal of CFO. I think there is a big core job around the quality and integrity of the data. Yeah. So I'm speaking, things around, the financial information, the day-to-day work. I'm assuming that's kind of bread and butter and done, covered. But there is a real job around ensuring the data that you have and the numbers that you're producing tell the story that we're trying to sell to investors. And frankly, the longer a track record that you have of that, the more compelling the story is to investor base. So I think the job that, for me, it really differentiates between a CFO who's really on top of it and a CFO who maybe needs a bit more time is around the quality, the integrity of the data. And I'm not saying just the financial sort of metrics as the KPIs and the customer metrics and the things, the inputs that go into the outputs. And then I think for me, also the second big job for a CFO, particularly in the context of these kind of strategic transactions, is to support the CEO even more so internally, like keeping the ship steady.
Yeah, because these things are really disruptive when they happen.
They're so disruptive, and the CEO sort of, different CEOs approach this differently, but in that time, a lot of the CEO's work becomes more external facing than internal facing. And ironically, current trading and the momentum in the business has never been more important. So somebody really needs to, really focus on that and ensure that the team are able to continue to deliver. A lot of times the team have a lot more work than they ever had. They're having to step outside their usual roles and do a lot more. And so and they're also uncertain because they don't know what's happening in the company. Are we going to raise money? Are we going to have new shareholders? Do I still have a job? Like, what does it mean? So it's a really kind of difficult time for the company. So I think the CFO has a lot of work, internal facing, to just keep things going and ensure that there's momentum in the business. So for me, those are some of the points that are outside of the usual kind of get the financials ready.
That's really true, isn't it? Because they've got, especially as a partner to the CEO, which we talk about a lot here, that partnership actually both externally and internally, and making sure that you're delivering internally. You mentioned something around history and having that compelling history, and that's something that's really challenging at the moment. Obviously, post-COVID, companies saw lots of different changing trajectories. A Bloomer World, we had a big COVID boom and things, and trying to navigate that story. So in terms of key metrics that you're looking at and things like this, what key metrics are people really diving into at the moment, and that CFOs should be highlighting and tracking?
So I'm going to answer that question in a very generic way, but hopefully it's helpful, because it does depend from sector to sector in terms of what investors are looking for. So a fintech versus software business are very different. The way I approach it is inputs versus outputs. So your revenue, your EBITDA, cash flow, those metrics, for me, they're very important, super important in grabbing the investor's attention in the first place. Look at the scale of this company, look at how fast it's growing. But that's an output. The inputs, what customers do you have? Are you getting more of them? And are they spending more with you? Those are the most critical
it's
numbers.
Lead versus lag, right?
Exactly. Those are the most critical in my experience. And what those inputs are does vary from company to company. In software, the data cube is huge. Like most investors these days, they don't ask for the metrics. They ask for the cube, and they run all kinds of scenarios. They cut the data, large clients, small clients in this geography versus that geography. They cut it in many different ways. Roll back, roll forward. And so actually looking at what that story is saying in terms of what your underlying customer base is doing, I think it's most important.
So I was going to ask you what makes a good story, but I think you've already answered that. Right? So having really compelling metrics, thinking about the input, so understanding the company flywheel and sort of what's making the company.
So I have a framework that I think about story-wise, and it really helps because I don't focus on one particular, I know I say tech, but tech is so broad that in some ways, sometimes I feel like a generalist. But my framework is sort of, number one, what's the market in which you're operating in? And most people think about TAM, but put the number to one side. It's like, what is the problem you're solving? And how important is it to the client base that problem is solved? And, is that market growing? So that's the first kind of the parameter of the environment in which you're operating. The second thing for me then is, what's your competitive position in that landscape? Are you winning? Are you losing? Are you, where are we starting from in terms of the competitive positioning? And then the third one, which is really critical, is what's your right to win? What is the proposition that means that you are going to succeed in what was undoubtedly for most people a competitive environment? So that's super important. And then number 4, if you win, do the economics make sense? So at scale, how much you need to pay to acquire a customer versus how much profit they add to you. Does that basic equation, which, we all thought about when we sold, some of us sold sweets in school to try and make money, does that basic equation work? And then finally, but critically, do I have trust that this team in front of me is able to deliver on this opportunity? And so, for me, those are the 5 things that I run through every time I, come across a new business, a new story. And it's a really simple framework that has served me well. And I think it's, there's lots of bells and whistles that you can add to it. But it kind of, for me, that framework kind of captures it well.
I love that framework, Moshe. Thank you for sharing. And I'm thinking, how does mine compare to that, and squeezing it in? You talk about that right to win, and obviously some companies are already proving that out on their journey. Recently, I've been told it's sort of, I need proof. I don't want to trust you, I want you to show me. So how do you think best for people to be tracking and demonstrating their progress along this journey with investors?
So I actually looked up what does that mean? And when we talked about this, we talked about getting investors to trust that you are in what you're saying to them. For me, it's when you tell me what you're going to do, right? And you do just that. And when there are bumps along the way, which inevitably there will be, you're kind of upfront and transparent around it. Now, I appreciate for a lot of companies, you need to balance with confidentiality. And I suppose there's a difference between investors you already have and investors that could be prospective investors in the future in terms of what you disclose, what you say. But I do think it's really important that the vision is clear, right? And without sharing numbers or without sharing KPIs, the vision of what you're trying to achieve is clear. And when you have strategic milestones and when you make progress towards that vision, that is kind of shared, actually, people can't trust what they don't know. So there is a little bit of information that needs to pass over. I do think that's kind of outside of a fundraising context, that's something that's important. When you are in a fundraising context or you're in an actual live transaction, I'm afraid the numbers need to do the talking. Yeah. So, the investor needs to come to you and believe that the team is capable because of your track record. But the most compelling way is for the numbers to do the talking. And so given that granular data, and like I said, these days, a lot of investors actually, they want you to polish the data and do a very beautiful deck that gets their attention. But actually, in terms, before they give you their money, they want to prosecute the data themselves, and they want to cut it the ways that they've cut data and the way that they look at things. And if that story is still consistent, then you're good.
And do you think people are getting more scrutiny now with there being fewer transactions and sort of maybe a slightly slower IPO market than previously? Do you think people are getting more scrutiny now? And sort of also I'm seeing like the AI use in data rooms and things. How are you seeing it in terms of trends?
Look, I think the AI, it's number one is making certain things more efficient, but I don't think it's meaning that the process is more streamlined in terms of how deep the diligence goes into. Obviously, valuation matters, but we've seen a real flight to quality in terms of how investors think about capital allocation and how they're spending money these days. So, there's a lot more scrutiny. I think where in the past, people will just take your word. You do the deck and they take the word for it. Now people want to look at it in more detail. So there is.
And that going back to that as well, with a CFO, you always want to have a really exciting future plan with the, you don't want a hockey stick, but you want this sort of exciting growth, but you also need to have a level of caution. You don't want to be sort of, too lofty. How do you advise CFOs to balance that excitement versus kind of conservatism and ability to beat your forecasts? And what, particularly in today's market, where would you pitch for a CFO?
That one's I think that's probably one of the most difficult. That and growth versus profitability.
Yeah, we can come on to that.
Don't ask me that one. Those are the most difficult things to balance. Look, the way I look at it, and I have to repeat again, I'm often not the person creating the forecast. I'm often the person who's looking at them and saying, are you sure? It's very rare that I go back and say those forecasts are not ambitious enough. You need to put some more ambition. Yeah. So I guess my first message is, if you don't have the ambition and the conviction and the belief, it's very rare somebody else would do that for you, right? So it's super important to have the ambition and to just challenge yourself a little bit in terms of how much you're going for.
No one's going to bring your numbers up.
No one's going to bring your numbers up, right? So it's only going one direction. Yeah. So that's the first message. The other thing, though, is credibility is important. We talked about trust already. So, if you consistently miss, then, that's not a good look. And it's quite a small world you probably found in the investors. And so credibility is very important. The way I think about it, to answer the question, is it's not either or. It's ambitious but defensible. And what I mean by that is, it's going to be very ambitious, but I'm going to tell you what the assumptions are that are underlying that ambition. Yeah. So I've assumed that this is how I'm going to grow, blah, blah, but that's based on my assumption on what the market does, my assumption on what share I can take and what that means. Yeah. Because I think if you build consensus around those assumptions, some of which just by definition will not be in your control, they will not be in the company controls, they'll be macro, political, whatever. Then I think if your numbers turn out different, then it's a different conversation, because, it's not a surprise to everyone, because they can see the assumption that probably led to whatever the outcome is. So that's the way I answer that question. I think you have to be ambitious, absolutely, for sure. but just think about how you are building consensus around the assumptions that underlie your ambition.
Yeah, I love that. Ambitious but defensible.
Yes.
The other one I like is cautiously optimistic.
Love
which
it.
Is, but I think ambitious but defensible is maybe a bit more toppy than cautiously optimistic. So we've got one step higher. I love that. And so obviously you touched on it, but that growth versus profit that you said, don't ask me that question. Obviously now I'm going to ask you that question. So there's companies out there that are fortunate enough to be able to pick, do we invest in growth or do we protect our profit and maybe a slightly lower growth? And valuation is pivotal off the back of either of those decisions. If you were a CFO or if you were advising a CFO in today's market in your sector, they're trying to get the best valuation for their shareholders, where would this
so the
very
first thing
go?
The first thing I would say on this is the answer to this is not a one size fits all. The answer changes with the market, with the industry, with what you've proven versus what you haven't proven. So for example, there was a company that asked me this question recently, and for them they had proven that they could take the profitability up, and what they hadn't proven was growth. So I said, look, the question for you is, can this business grow? So if you had the ability to choose, that's what I would want to prove. But to answer more generally, we have done the maths. We've done tons of analysis around this. And if you do the empirical study, growth does have a bigger impact on valuation than profitability. Now, the margin used to be quite large. 2021 days, 2020 growth was worth multiple points of profitability. That has narrowed somewhat, right, in today's market. So the way I would describe it is growth is super important, but your path to profitability, if you're not break-even yet, or what the profitability looks like at a mature stage is also an important underpin in the current market environment.
So cake and eat it is the answer. No, that makes sense. So growth is important, but the delta between the importance of growth versus profit is less than it has been in the past.
Yes.
Okay.
And I think that you almost kind of think about it as you need to show a certain level of profitability or closeness to profitability to take that off the table, and then people can really give you credit for the growth that you're delivering. But if the profitability is so far away, and this, by the way, also depends on what kind of capital you're raising and where you are in the cycle. But if the profitability is so far away and you spend all the time talking about that, then you actually don't get to talk about what exciting growth opportunity you have in your business sometimes, which is the other way to think about the question.
That makes a lot of sense. Thank you, Moshe. And in terms of, you mentioned storytelling and we talked about story. So I talk about storytelling with my team all the time. And it's that so what behind the numbers, and it's engaging people in the numbers. But obviously the numbers need to stack up as well. So it can't be just all smoke and mirrors. Have you seen some CFOs tell great stories and what makes a great story? Is it the person telling the story? Is it what you've mentioned around having like what the problem in the competitor landscape is? What do you think makes a great story?
I think it is that, for me, if I were to go back to that framework of what's a great story, the one that I say kind of stands out as your right to win, because I can probably find out about the market. With research, I can find out about your competitive positioning. I suppose the ones that actually the way that you tell it really shapes is what your right to win is. And having a management team who are very clear in what that right to win is and tell that story and kind of help develop that conviction that they can deliver on the right to win. I think that's probably what makes a difference in the stories that I've heard. And also being able to tell it in a simple way as well. And a lot of the businesses are complex. The work is complex, but investors are usually pretty generous, even if they're tech. Like me, tech is, a fintech one day, a software business the other day, e-commerce the other, like it's very varied. And so being able to tell the story in a simple way is also really important.
I think that's one of my, I like to think that's one of my super strengths, mainly because I'm not clever enough to articulate things in complicated ways. But actually Einstein had this theory, right? He had this framework of intelligence, and the top thing of intelligence was being able to explain things in simple terms. And I think it gets really good buy-in. And to your point, investors are going to different companies all the time, and so being able to explain things really simply, I think, also shows that you understand it. In my mind,
I agree.
Okay, so simple, but that right to win is the key thing. And then in terms of, we talked about the management team, we also talked about trust. When you're looking at a CFO, and the role of the CFO is so important when we get these big capital transactions, right? What kind of things are you looking at? Is there any ticks that you're looking at, thinking, "Oh, this CFO is not ready," or "I wouldn't give this the CFO my money"? Is there any ticks or any signs that you think the CFO is on point and are going to do a really great job, or perhaps the opposite?
Yeah, and look, I'm not saying this just because I'm speaking to you, but the CFO role is one that I've always truly admired, and I think it's really difficult because in some ways, well, I guess the CEO is usually your boss, but at the same time, a big chunk of your job is being a sparring partner for that person, right?
That's a tough gig. That's why we have this podcast. It's a tough gig.
So I find it, like really fascinating, that dynamic, because the best CFOs are the ones that are that sparring partner for the CEO. So you are absolutely aligned in terms of the overall objective. That is important. What you're trying to achieve is very clear and aligned. But you also allow yourself to think strategically, independently about how you get there. And you give a different view, or you're able to influence when needed, or you're able to challenge when needed. So for me, I think, I assume that everybody has the numbers on lock and everybody has that stuff sorted. And the really differentiating thing, in my experience, is that dynamic CEO, CFO partnership, and the fact that it works really well. And by the way, works really well doesn't mean agreeing all the time, right? Yeah. That I think is key.
You said you think the best CFOs are the ones that can spar. I think the best CEOs are the ones that bring in the CFOs there, because it's very easy for a CEO to bring in a CFO that's a yes person.
Yes.
So for me, the best CEOs are the ones that pick a challenging sparring partner. So I think there's a commonality there.
Yes, well. And it's I don't know who has credit for saying this, but this concept of the best managers, they're the ones that surround themselves with people who have the skills that they don't have, and you recognize that and you allow that to shine and to thrive. Yeah,
I love that. And that's also about this, and I talk about psychological safety a lot at work as well, having the psychological safety so that you can challenge, but also you can play into your own strengths and not have to sort of conform to somebody else's. I think that's really important.
Exactly. And I think the other piece, so in addition to the CEO CFO dynamic, is this ability to think ahead for the CFO. I talked earlier about inputs and outputs, and the inputs being the most important. And actually, I think CFOs who really see and understand, truly know that linkage, so that they're a few steps ahead and they can see when there are certain changes in the inputs, that's going to become an output thing in a few years or a few months. You don't see it yet, but it's coming. And I think that ability to just, see ahead and think a few steps ahead is really helpful.
And to be able to take risks that are a bit few. I see so many, in my past, I've seen CFOs that are very short term on things in terms of in-year profit or in-year delivery, and actually being able to make decisions that might not pay off in a year, but to your point, they're sort of looking at the input metrics. That's really interesting. Thank you, Mose. And something else that's obviously really topical at the moment, and I hope it remains topical for a long time, is ESG. And in your sector and what you're seeing at the moment, how much does this play into value, and how much do you see CFOs to talking about environmental and social things on top of numbers?
This is a bit of a controversial answer, this one.
Right, go with it.
Look, I think the times have changed a little bit. I think it's still super important. But I think there's been some evolution into how people talk about it and the most effective ways of talking about it. There was a time when, we would, every time you did an equity story, there'd be a token page at the end to talk about ESG. I don't think we're in those days anymore.
Now it's AI.
Now it's AI. You're absolutely right. You're absolutely right. And so I think that we are not in the sort of token checkbox landscape for ESG. which in some ways is no bad thing, because I'm not sure how much attention that was. But I think what's more important now is actually those businesses where those values are, integrated into the mission. They're woven into the story, right? It's woven into how you talk about your customer proposition. It's woven into how you talk about how you deal with your colleagues within the firm. And I think those stories are more impactful. We talked about storytelling earlier. Those are just more compelling as a story to tell. So I think we are definitely seeing people who have that integrated ESG element. Some of us don't want to call it ESG, but those values into the equity story are definitely resonating with investors. It's still important to investors, but it's no longer just the checkbox token page at the end.
And there are some investors that would... is it make or break? Like would investors pull out based on a poor ESG story? Is it not as pivotal as perhaps it?
Yeah, certain investors who have very specific mandates.
Yeah.
But I would argue they probably wouldn't look in the first place if the story was poor. I think if someone's going to look at it, I think, they think about how they could improve it and what strides could be made to improve the ESG story. But I don't really see experience of investors who have taken the time to spend time with a company then pulling out because there was something that didn't add up, because most times there's something that can be addressed and rectified anyway.
Okay, super. And we mentioned AI, so I think it'd be rude not to. I'm seeing CFOs with really different confidence levels around AI. What's, in terms of your role and from a banking perspective, what's your expectation of a CFO when it comes to their adeptness with AI?
It's just to understand the impact on your business. And the impact is two ways. Is one, in terms of how you're using it internally, how it's helping you serve your customer base quicker, faster, cheaper, making things more efficient, changing the proposition. So that's super important. But I would say, and maybe this one's more CEO versus CFO, but both is really important, is also how it's changing how you go to market and how it's changing what, the top line. So it's, I think a lot of times... You're
not expecting me to write code anytime soon?
No. I'm definitely not expecting you to be able to write code or be that technical, but I'm expecting that you have somebody in your team who's able.
I'm actually an AI champion. Okay,
there we go. Plus.
Okay, perfect. But so understanding the impact on both how they go to market and how it operates the internal business as well, the effectiveness there.
Exactly, and making sure there's somebody else in the. If you're not the technical CFO, there's somebody in the team who is a technical person.
Okay, super. And so talk to me as well. So we started off talking about your 17 years at JP Morgan, but we sort of then quickly moved on. I was trying to suck all the insight out from an investment banker's point of view, and it's been really helpful. But tell me, a question that we ask everyone on this podcast, because this is a podcast predominantly for female CFOs, made by women for women. How has your gender ever impacted your career? Obviously, investment banking, it's not traditionally female area.
How has it? So it has impacted. I suppose we should just start there. And the reality and the truth of it is there are positive impacts and there are maybe not so positive impacts. Positive impacts, I think, the way I approach people and the way I think about situations and the way I think through problem solving, for example, it's often different from some of my male colleagues, and actually the team benefits from having the two perspectives in the room or as part of the team. So I think that's been really important.
And do you think that's valued? So that diversity of thought has been valued?
I think it's valued, especially when people get to know you. I think sometimes, and this is some of the negative elements, people don't know you, then maybe it takes some time to sort of understand that you have a reason for coming at things the way you have. But it's definitely valued once you're known. The other thing I always say is people remember me. There's not many people in the industry that look like me. So hopefully if I've gone to a meeting and I've done a good job, they're more likely to remember than the other.
I normally remember you because you've come wearing flowers, which for a flower company, I'm like, tick, big tick. Yeah. But so you're memorable and you're proud of it.
It's such a tiny thing, but I think it's a positive impact that sometimes we don't take the credit for. Look, I think it's also there's a lot of juggling. So I have children, I have a family to juggle. And, you know, my husband's not going to like this, but we talk about the mental load. He's very present and very active, I have to say that. But, you know, there's a lot of...
The mental load stuff was
correct, exactly. There's a lot of like logistics to allow him to do all the things that he does that happens in the background.
He does what he's asked.
Yes. And so, you know, I think that that's a lot of joke, but in some ways it may be more efficient, right? I don't have time to debate this 50 times, you know, these are the options. So that, you know, comes into it. I think for me, and maybe, I don't know if this is a gender thing or this is a personality thing, I do always have to remind myself to speak up. And like, you know, oftentimes I have a meeting scenario where someone's asking questions and they seem to be, and I'm watching the interaction and it just seems like they're engaged and they're asking questions. But to me, everything they're asking it's very obvious. And I don't have those questions because it's clear to me and I don't need to take the time to have that elaborate conversation because it's very obvious. And I'm like, but in that meeting, if I wanted to be critical, I presented as not being as interested as the other person. And so for me, I don't know if it's a gender thing and maybe it's more a personality thing, but I do have to caution myself sometimes to, you know, just try and recognize those predispositions and try and correct for them live, no matter how uncomfortable it may feel. And it's a work in progress, shall I say.
Have you got better at that, do you think?
I think I have got better. I think I have got better because there are some times when I cringe. But I just think it's a necessary, you know, it's a necessary situation. I spoke to a VP, so someone sort of mid-level in their career in my team the other day. We were at team drinks. She's a woman, and she was saying to me, and we were saying, I was like, you know, you have this phenomenon when you're in a meeting and you say something and then the man next to you says exactly the same thing, and all of a sudden I was like, yeah, and she's like, yes, what do you do? I said, I started doing it as well. You know, I said, you know, they'll say something and I'll be like, yes, so I agree, and I will just put a point of emphasis on XYZ. Yeah. And first, I cringe. I have to admit, I cringe a little bit, but I've just realized that otherwise you seem like you're not engaged. And so sometimes you do have to, without betraying your values and your personality, and if you really don't agree, please don't agree, because, you know, you have to keep your integrity. But there's just some of those little things that we need to correct for. And I think, you know, we genuinely need to correct.
If you can't beat them, join them.
Just learn what they do and, you know, try and beat them at some of it.
No, I think that's fair. And also sometimes being able to make sure that you have a voice in the room. But I have learned sometimes, but I'm probably on a different personality scale. I'm much more, you have to shut me up, I think. But actually, there will be rooms where you put yourself forward, you feel very comfortable doing it. And there'll be rooms where you to your point, you know the answer. You don't need to show that you know. Like some people will just be trying to appear clever, and you don't need to sort of rise to it. Which I think sounds like you've got a perfect balance, Mose.
I don't know. Some days.
So, what advice if you're listening to somebody that is sort of more naturally inclined to keep quiet or not to lean in? So maybe someone more junior in their career, what advice would you give them?
Look, I would say that if people don't know, if you don't say anything, then, you know, people assume that you don't have anything to say. And so it's important to show that you have something to say, and it's important to show that you have a contribution. So, you know, we just gotta grit and, you know, and just participate. You gotta show up and you gotta participate. And for different businesses or different teams, that looks different in terms of what that means you do on a day-to-day basis. But just think about it, like, you know, participating and showing up is important.
And I think that's really amazing advice. And it's also very easy in a remote working world not to show up as obviously online as well. So I'm definitely trying to encourage my team to be in person as well, and to be, I think physical presence definitely helps that ability to be seen, doesn't it? I don't know what the JP Morgan stance is on hybrid working. But
it's a hot topic. Our CEO has a very clear view on this. And so we all are working in the office 5 days a week. That's style policy. There's obviously a lot of flexibility around that where needed. And I think that's one of the things that we've kept from the COVID period. If when people need flexibility, absolutely take it. But, the firm's view is, and I agree with it, to be honest, is that, it's better for the team when we're together. And so we try and be in the office.
I do think it's better for those people as well that are more naturally inclined to stay in the background, actually, or to be more more quiet. Actually, they sort of have that physical presence, and it's very easy to hide and not push yourself when you're behind a screen. Yeah. Now, listen, a question that I ask everybody that I haven't prepared you for is that I'm going to send a bunch of flowers, obviously. Bloom and Wild sends flowers to make people happy, to somebody that is really cheerleading you and supporting you at the moment. So who would you like me to send flowers to when this gets aired?
It's got to be my husband.
I was like, your husband or your nanny? I was like, which one's it going to be?
It absolutely has to be my husband. Just because, look, I present at work in a certain way, and I go home and I can be the absolute opposite of that person. And it just feels, it's just safe, and I have a partner, and, there's times where he's the one's like, you need to get out of bed and go and do X, Y, Z. And I think that sort of belief in that true sort of my success is his success and vice versa is super important. And I couldn't do any of this stuff without that support. So it's got to be him.
Well, I'm delighted that you have that support as well, and that you've been able to have such a successful career. But yes, we of course will send him some flowers. It sounds like he's very deserving. And well done you, Moshe. Young family, huge, big job, wonderful marriage by the sounds of things, and a really interesting sector that you're working in as well. So I'm delighted that you've come here and shared your insights. Thank you so much for coming in.
Thank you so much for having me. It's been fun. Thank you.
So Dominique, how did you get on?
Loved it. Really useful, tangible advice for CFOs. Really found that 5-point framework really interesting, and I definitely will be embedding that at work. And then also I love this piece around owning the fact that you might look and be a bit different. Yeah. And so as a black woman, Moshe knows that she's probably not her usual investment banking peer, but I think she owns that really beautifully, and she's changed that narrative in her head, which obviously led to lots of success for her. And then also I love this sparring partner. So we talk about what a CFO can do to build trust, and it's really interesting. We talk about it, don't we, as part of that CEO-CFO relationship, that the investment bankers are watching that relationship.
Yes.
And it's not just about them getting on well, it's about them challenging each other.
Absolutely. And I think that's the point that she also made, or I think it might have been you made, was that, choosing the right person could be so easy to get the yes person in. And actually choosing somebody that will challenge and stand up to a CEO, so that you've got that incredible relationship.
I think it's really good advice that CFOs listening. It's very hard sometimes to stand up and do the right thing, or
especially
to be
when you're boss.
Yeah,
Absolutely.
But to back yourself, know your worth, and have those difficult conversations. Absolutely.
Brilliant. What a great guest.
Oh, she was amazing. Thank you, Norris. We'll see you next time.